Hey, do you want to profit from crypto? Then join my DeFi Academy. The Crypto DeFi Academy will help you create generational wealth. But don't take my word for it. Listen to my students.
When I first got into crypto, I remember thinking to myself, I need to learn more. Brian Rose, learning crypto, learning DeFi, gotta do it.
I've learned how to make more money with my money, which was the goal. Why I went into this was to learn how to have my money work for me. And now I am starting to understand what that looks like. Working with Brian and his team has been so inspiring. It's been so clear and so well done. And I am just forever grateful for this program.
I was interested in learning more about DeFi space and crypto, learning more about trading strategies, wanted to build some new relationships with some like-minded people. As I sit here today, all three goals have been accomplished.
This is for people who are serious about becoming traders. This is the way it should be done. There's accountability. If you're looking at this document right here, this is accountability. I guess a major theme, pull the trigger. That's what this course is about. Don't sit there and debate this thing. Let all the gains pass you by while you're sitting there, caught up in the paralysis of analysis.
Through this process, I just realized that I hit the jackpot. I hit the jackpot with the community. I hit the jackpot with the strategy and how that I will be able to build generation wealth. I truly believe that.
Coming from knowing practically nothing, a couple things here and there about cryptocurrency, I knew absolutely nothing about DeFi, how to buy, sell, how to trade, hot wallet, cold wallet, all that storage stuff, knew nothing about that. And this was truly and utterly an eye-opener for me. The speed of the learning over 4 weeks was just fantastic.
The information, the material, the modules, you took complex concepts and made them easier to understand.
But we all signed up for this for a reason. And we signed up for it to become better at learning crypto and understanding decentralized finance and just how we can take our lives to the next level.
This is my first subject, I don't know, in like 10 years that is completely out of my wheelhouse. I did not anticipate how passionate I was going to become about it. I've never experienced such incredible energy on a live call. Brian Rose, you are a legend, my friend.
It's been a ride, to say the least. I had no experience. Learning from Brian has been very, very fast, but without a group of support, it becomes extremely difficult to navigate into the ocean of information that is there.
Prior to joining the DeFi Academy, I felt really lost and overwhelmed with all the information that was out there. I didn't know where to start, and I didn't have anyone to ask for help. But after completing the course, I feel far more confident in my next steps. And I'm coming out of this with a much stronger mindset to ride the ups and downs of the market and to better diversify my portfolio.
What I've learned is, how to take ownership of my life in a way that I really hadn't before.
The unique experience I had from Londonville is this extreme ownership and accountability mindset alignment. It is not about what you learn, but about who you learn it from. Especially Brian, who brings this magnificent level of motivation.
Having Brian teach us the DeFi course, it's been surreal. I could see him working there. He was there for us, and those calls were very pivotal, and it was everything I hoped for.
Joining DeFi Academy has been one of the best decisions I have made on my blockchain journey.
Thank you to the students for their community spirit. I truly hope that everyone gets to achieve their dreams and goals that they set out for themselves.
What the community has brought me goes without.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. how far can we go?
This is London Real. I am Brian Rose. My guest today is...
This is London Real. I am Brian Rose. My guest today is Ben Armstrong, the broadcaster, investor, and cryptocurrency influencer. You are the founder of the BitBoy Crypto YouTube channel, where you post daily market updates addressing all the latest news to a massive community of crypto enthusiasts. Your aim is to provide education and entertainment in equal measure and have amassed the largest following of any crypto platform with over 5 million total subscribers. 1 year ago, you were last on our show. You warned of an upcoming bear market in 2022, and you believe that the Ethereum merge is the biggest and most significant event in cryptocurrency history that will transform the industry as we know it. You've written a new book, Catching Up to Crypto, Your Guide to Bitcoin and the New Digital Economy, which offers a comprehensive breakdown of Bitcoin, the blockchain, and the future of money. Ben, welcome back to London Real.
Yeah, thanks, Brian, for having me. I always love being on this show. I think, people get a lot out of it. And, like I always say, any day we get to talk about crypto is a good day.
No, it's all good. And, I remember us talking in September last year, and everything was going up, and you were saying, look, the bear market is coming. Yeah. And quite frankly, Ben, you were like a party pooper. And I remember, I've got an academy, and I have all my students in my academy, and they're big fans of you, and I'm always quoting you. And, and I'm always talking. I was like, look, Ben's talking about this happening. It's just to remember, and we always talk about stop losses and stuff. But I remember we had our 10-year anniversary, and I was interviewed in the studio for our 10-year anniversary, and that's when Bitcoin hit its high of 69,000. And it's interesting to know that you were talking about that. And I think it's because you've been in this market so long that the cycles come and go. I think you say it's like 3 steps forward and 2 steps back. But how did you know that, and how were you comfortable saying that even back in September?
Yeah, well, it's just been very obvious. People are always trying to reinvent the wheel in crypto. And there's this giant kind of like contest of who the smartest person in crypto is. And people are always trying to come up with these really unique, complicated theories on where Bitcoin is going to go and why it's different this time and how the network and the adoption plays. No, guys, it's a 4-year cycle. That's it. It's simple. It's way more simple. And people that are real traders out there that have been trading traditional markets for a long time, it drives them insane that it's this simple. They want it to be so complicated. But the fact is, every 4 years, the Bitcoin production gets cut literally in half. Layman's terms, today there's about 900 Bitcoin being mined per day. In 2024, sometime between March and April, it's going to go down to 450 Bitcoin per day. You can't overstate the importance the importance of that. Literally cutting the supply in half. And kind of example I use is like, imagine if every 4 years in the United States, we cut the amount of oil and gas coming in by 50%. Imagine how expensive gas would be in 20 years from now. It would be insanely expensive because supply and demand would dictate it. Well, supply and demand is built into the Bitcoin code with this Bitcoin halving. And every 4 years during the presidential election years, we see Bitcoin hit an all-time high. Every 4 years in the midterm election years, we see the price of Bitcoin bottom. And that's where we're at right now. And everybody always says the same thing. They say, it's different this time. There's this many more people in crypto. People know about this now. You can go back as early as 2012 and you can look at news article after news article after news article. Every single time Bitcoin was near an all-time high, every single time Bitcoin was near a low, every single time the Bitcoin halving was occurring, people were always saying the same thing. It's different this time, and they've been wrong for 13 years. It's the same. It continues to be the same. It might change one day. Maybe when the amount of Bitcoin being mined per day is much, much smaller. I think we still have another 3 or 4 cycles left, at least, kind of going at this pace. But the adoption doesn't really factor in. All the adoption for Bitcoin does is it kind of adds fuel to the fire for the bull runs. But we're still seeing people, when the price hits a peak, leave the space in droves. And that's going to continue. People are always looking for a quick buck. And so last year, I was looking at the price of Bitcoin, and I said that this year was going to be a bear market 3 or 4 years ago, because it's just obvious the way that this has continued on. And so I was very confident. I was on a show last year with 5 other people. There were 6 of us on the show, And 4 of them were literally laughing at me for saying we were going to be in a bear market next year. And then I was like, no, we're too far along now. The price of Bitcoin is pretty much only going up from here. Maybe have a little retrace. Well, we've been down over 70%. Again, the average is 85%. And we believe we may not touch 85%. That's $10,366 would be that price point. But somewhere in that 78 to 85% range, we think is where Bitcoin's going to bottom out later this year.
All right. So we got more pain to go. How low is it going to go, BitBoy?
Well, that's a great question. And I think, for us, we've had a target on this $10,000 to $14,000 range pretty much ever since, I think it was back in April, we called this officially a bear market. The Russian-Ukraine stuff kind of complicated things because, traditionally, war has been good for markets. I know it sounds very callous, but the fact is it's true. So we thought maybe we could see some potential upticking from that. And we did. We saw it go up through April. I think it got back up to 48,000, I think is where it peaked out at around the Bitcoin conference. And then it just, shot back down. As soon as it went back below 40, I knew at that point, okay, we are definitely in bear market territory. And so we called it officially bear market. We did a video where we looked at when, kind of a timeline looking forward. And that's where we started with this $10,000 to $14,000 range. Like I said, 10,366, the exact number would be an 85% drawdown from the all-time high. And interesting, you were doing something pretty cool with your 10-year anniversary when Bitcoin hit its all-time high. I was celebrating the Braves winning the World Series. I was in Houston for the, my local team here, the Atlanta Braves. Got season tickets. Went out there to Houston with my son and one of my best friends. And, the next morning is when Bitcoin hit an all-time high. I was just way up here. It was definitely cool to see. But now we're on the bottom side. We're on the downswing. So from that peak to where we think we're going to see somewhere in the $10,000 to $14,000 range. Now, I'm starting to wonder at this point because I'm pretty sure we were definitely at least one of the first channels, if not the first channel, to officially put out, we believe $10,000 to $14,000, even when it was at $38,000. We believed that was going to be the bottom range. Now that $10,000 to $14,000 range is like where everybody's saying it's going to go. Now that everybody's saying it's going to go there, I'm specifically looking at kind of 13,500 through 15,000 as a potential bottom. Once it goes down into that range, I've been telling my channel right now, we're on bottom watch. It could happen any day. We believe it's probably going to happen near the end of November, beginning of December, but we're within a margin of error here where we could have, like if the Fed announced something crazy or, we had another Celsius situation, we could see it plummet further and have a large wick sooner. But when it hits that $13,500 to $15,000 range, we're definitely going to be adding a lot of ammunition in our personal buys for crypto.
Well, that brings me to the next point. How do you trade these markets? I think a lot of people would be curious over the last year. You kind of see that bear market coming. You've been in these for a long time. You have a pretty big portfolio, a varied portfolio. You're public about your portfolio, right, and people can go watch the videos there. And I love the fact that you are. But how do you go in? Because trying to buy the bottoms is usually a mistake, especially for beginners. I wouldn't advise that to anybody watching. But how do you kind of get in when you feel like the low is coming?
Yeah. Anybody who buys the exact bottom or sells the exact top, they're just lucky. That there's not a formula to that. What you want to do is you want to be within a range. You want to be close to it. Like if you would have sold at 65,000 and the peak was 69,000, we certainly would have called that selling the top, So for the bottom here, you got to really look at it in ranges. Now, what we've done is we've kind of staggered our buy orders, not just for Bitcoin, but for other altcoins as well, based on where Bitcoin is going. So the numbers we're specifically watching, if we make a new low and go below 17, we have some buy orders there. Then we look at that $10,000 to $14,000 range. And what we've done is we've said, okay, if it drops down to 13,500, we're buying at that point. Then we say, okay, at 11,000, we're going to have some more buy orders there as well. Then we also have some buy orders at like 9,800, right? Because if it were to wick down really hard, it could wick completely through that range, and then it could bounce back really quick. If it's the high nines, I think we're going to get a large bounce very quickly. Then we also have some lower price points as well. There are people with targets anywhere from $3,000 to $7,000. I don't believe it's going to 3,000 by any stretch of the imagination, but we do have some buy orders in the $7,000, $7,500 range. Worst case scenario. Now that's a much smaller amount than we have dedicated to that. Why? Well, because if it drops down that low, you're your reward versus your risk there is much, much higher. So you don't have to allocate as much capital on those kind of almost unrealistic numbers, but still within the realm of possibility. So that when it comes to trading this market right now, like if you're leverage trading, I mean, the market is very finicky right now. You look for short-term hits and be done with it. If you can make some profits leverage trading, you pull out your profits. This is probably not the time you want to ride a short all the way down or you want to ride a long all the way up. We've been in a lot of choppy sideways action. It's a hard market to trade. If you're into leverage trading, then you're really looking for from the peak down to close to a bottom, or you want to get somewhere in the lower numbers and then be able to ride that all the way up. Because most of us believe there's probably more downside, I don't think it's the time to be putting out a long. But also when it comes to shorts, if you're looking for long-term shorts, there's just not as much bang for your buck in this area, because there's a lot of support levels below 17,000 where it could bounce up very quickly. You could, if you didn't have a stop loss, use proper risk management, and didn't move your stop loss based on profit, you could actually make a massive amount of profit and then wick all the way back to a loss in 10 minutes. That's the kind of thing that can happen when you're doing those kinds of trades. So we're really talking to our audience a lot about, just spot trading and trying to get good price points and trying to stagger your buy orders, at numbers that make sense. Traditionally, I think this is a very important aspect as well. Traditionally, what we've seen is Bitcoin bottom and then go sideways for a year. When it comes to altcoins, now there was a little bit of fireworks in 2019. It went up to 14,000 and then went right back down under 10 again very quickly. It's the highest it reached after the peak in 2017, December. But what you want to do is with altcoins, you actually have a much bigger window to buy. Those altcoins will generally bottom out and stay sideways sometime after Bitcoin bottoms. Like if you look at Cardano, it's at 5 cents for almost the entire bear market. So with altcoins, you don't have to feel as antsy, like I got to come in, I got to make these buys. We are certainly seeing Bitcoin dominance drop, and we are seeing Ethereum dominance on the rise thanks to the merge. We're seeing altcoins in general on the rise against Bitcoin right now. So we could potentially see something different there, but in general, you got a long time to stagger those buy orders for altcoins.
And you mentioned something earlier, when a lot of people are calling for a certain price target, that usually means it probably won't happen. And I think we saw that when everyone was predicting the 100,000 Bitcoin at the end of the year. And I try to explain this to my students, and they're like, well, what do you mean? Just because everyone thinks something's going to happen, why wouldn't it? And it's like, well, that means they're positioned that way. That means they'll all get stopped out with there's a little jitter in the market, and then that can push the market the opposite. So when you hear everybody calling for that range, like you said, it makes you maybe move your buy up a little bit.
It does.
There. Okay.
Well, you always want to, you never want to be trading on round numbers, really, because round numbers usually don't hit. It usually plummets below them or it bounces right before them. And the reason is because many of these round numbers are psychological levels. Like if you look at Bitcoin, 50,000, for instance, 40,000, 35,000. You look at, previous markets, you looked at the $10,000 level, you looked at 12,000, you looked at 15,000, nice big round numbers. That's where most novice traders, which is the vast majority of traders, they put their buy orders, or in the opposite case, their sell orders on the way down. Like 50,000 was a huge place where people had sell orders because it makes sense. It's a psychological big round number. So it's not that the thinking of the general sentiment of the overall crypto trader means it's not going to go to a certain level because it's counter to, because they're saying a number doesn't mean it's just not going to hit that number because people are saying it. It's because of the tangible actions of the literal functional buy and sell orders that people place at those round numbers. So when everyone's thinking $10,000 to $14,000, what does that tell you? That's going to tell you people are going to have a ton of buy and sell orders at $10,000. They're going to have a ton of buy sell orders at $12,000. They're going to have a ton of buy sell orders at $13,500. Same thing at $14,000. There will be some people that will stack above that because 15,000 is another nice round psychological number. So what you're looking at is a massive amount of orders that can trigger actions. So it goes down to 15. It'll be very interesting to see if 15 could be a strong level of support. It never has been before. We don't have any strong support in the past around that number. And that's why I tend to think it'll go through that floor. But I think there's going to be a lot of buy orders at 13,500 that could propel it upwards. And also probably at 14,000 because that's the top of the range. You just got to look at what's popular of the ranges people are talking about. And you can guarantee that's where a lot of buy orders are going to be. So it's not It's not just counterintuitive thinking, it's more functional by orders and where they're placed.
What percentage of your portfolio is cash right now, or cash equivalents, or stable coins, at least asset-backed stable coins?
Yeah, a good bit. Right now, we're probably over 40 to 50% right now of that. And I think that really what people have to understand is this has been a pretty big change for me personally, and in the way that I look at the crypto markets. In previous cycles, I was all about, let's get every single dollar we can get into. I've been much more patient this time. And we've really learned, like, look, you got to trust what you know to be true. And I think if you go back to last year, everybody thought Bitcoin was going to 100K. Everybody. Totally logical. You look at the rainbow chart, you look at the stock to flow chart, you looked at crypto influencers who are basing a lot of their information on those two charts. It was totally realistic to believe in 100K. It didn't happen. So what happened there is that I said we were going to have a bear market this year. I actually said the top of the crypto market, I said this 2.5 years ago, the top of the crypto market would be between Halloween and Thanksgiving in 2021. We nailed it. But you know what I didn't do? Take my own advice. I was still focused on that 100K, even though I shouldn't have been. I should have said, okay, we're right in this range. We just hit a new all-time high. It's retraced pretty big. Let's clear out a bunch of positions. And we didn't do it. And then I said, okay, well, if it goes below 38, we're going to sell out of everything. And then it went below 38. I got nervous. I didn't do it. And really what I've learned through the last cycle, especially being responsible for so many people in crypto and their education and things like that, is that I got to trust what I say a lot more. I got to trust what I believe because it's based on data. It's based on research. What happened is last year I was basing it more on the feelings. You got to get rid of your feelings in crypto, in markets and trading in general. And so this cycle on this bear market, look, I believe I know when it's going to bottom. It's going to bottom end of November, beginning of December, certainly within a range of error where it could happen now. It could happen through January. But when we see prices go down during that time period, we're going to trust it. We're going to allocate our capital. We haven't got there yet. So when we get there, we're going to allocate our capital. And if it bounces before that, then so be it. During the last cycle, we didn't trust ourselves enough. This cycle, we've learned we got to trust ourselves more on what we know to be true. And this is why it's so important for people to do their own research and make a plan and implement it. And one kind of cool thing that I think we're going to be doing, right? Not for 100%, but I've been in touch with somebody who's doing actually they have a software that will create an exit plan for you, and then people can follow it. So that's one thing we're going to be doing in the next market is we're going to be creating an exit plan well ahead of time, and we're going to follow that exit plan, and then people are going to be able to follow along and track that exit plan as well. So I think that's going to be something kind of cool that we're going to do to kind of hold us accountable, because in the moment, it's so freaking hard to do. In the moment, your feelings are so overwhelmingly bullish or bearish, it's hard to make the right decisions. And look, I'm an emotional guy. I'm an emotional guy. I tend to really wear my heart on my sleeve. And I think that, people that watch the channel, they know that very well. And I think that is a big, that cripples me in the crypto market. And so I'm really trying to get away from that, do what we know works, create our own plan and stick to it.
Well, look, this is an important teaching moment and learning moment for anybody watching, whether you're new to crypto or have been in crypto for a long time, because Ben's being really honest, and I will say I've made the same mistakes in crypto. Yeah. It's like we should know better, right? We've been in this long enough. We know what stop loss orders are. We know how to average in and out of positions. We know to hold cash. We know to do this, and still, oftentimes, we don't follow our own advice. And This is what markets do to you. And I always tell my students, the minute after you place a trade, you now have an emotional relationship with that trade. By definition, you're up money, you're down money, and you're already making improper decisions, which is why ideally you want to put your, as you say, exit scenario in before you put the trade on, because that's when you don't have an emotional relationship with that trade. That's when you can see clearly. Once that thing's on, you're never going to make good decisions. It's like the movie Fight Club, where Edward Norton is saying to the guys, like, untie me. I don't want to do this anymore. And they're like, yeah, you told us you'd say that, sir. And it's like, okay, that's because he already programmed them to not listen to what he's going to say, because they shouldn't trust that future version of him. And it's like, that's what you're like when you're trading crypto. And look, I was on Wall Street for 15 years. I traded stocks and bonds and commodities, every market under the sun. Nothing prepares you for crypto because crypto is 2, 3, 4 times more volatile than anything I've ever seen in the marketplace. And so what happens is you get even more emotional about it, and you cannot think clearly or see clearly in this market. You just can't. And so you cannot trust yourself. There's that the old Greek myth where Odysseus, he's like he's going through the Mediterranean or something, and he's like, we're gonna go by the sirens, and they're these crazy girls that they'll make you that they sing you, and they'll make you make bad decisions, and we'll crash our ship. So he makes his sailors put wax in their ears, I think. And he says, don't listen to anything I say, because I'm going to say, go to the sirens and we're going to die. So they all stick ear in their eye, and he's there, and he wants to listen to them. And he's telling them to go there, and they're just not listening. That's a bit like crypto's like sometimes. It's like you got to get the wax in the ears and stick to your game plan more than anything. So I appreciate you saying that.
Absolutely.
Because, like you said, you get emotional and passionate. The reason we're in these markets and even talking on camera is because we are passionate. But you just can't trust yourself once you put those trades on, right?
Yeah, I mean, that's definitely how it is, you know, and I think it's really almost like anything else in life, where, you know, you always tend to give better advice to other people than you do yourself. You know, if somebody's like, you know, I'm scared of this or that, you can coach them into like, no, you can get over that fear. You can do this, you can do that. But ultimately, they got to be the one to make the decision. And then you sit back and you say, man, I should probably take that advice myself. I don't do those things. I think that's really, you know, really appropriate.
Yeah. It's like, I always tell my students, it's like getting married in Vegas. It's like, you know, and sometimes it's the good news you have to worry about, you know, how, like the 20 tequila shots you do when you go out. I know, you know, I don't drink anymore because we learned the hard way. Right. But like, you know, when you're going out and doing those things, it's sometimes the good times you have to be worried about and the bad decisions you make in those good times. It's not always just the bad time decisions. So it's something that people need to put in. They need to put those stop losses in and think about that stuff. So look, I'm glad you said that. And it's good advice for people to know. And now you're going to be averaging in or looking at some of these levels. We should probably talk about the merge, because that's a big thing that's on the news. It's something that you've been talking about for a long time.
Yeah.
You said the biggest event in crypto history. That's a bold statement, Ben.
It is.
Why do you say that?
Yeah. I mean, look, outside of